Hi, I'm William Ogden Moore from the research team at Grayscale Investments, and I'm here to give you a rundown in the last month in crypto. In April, broader macroeconomic conditions became less favorable, primarily influenced by strong economic growth and persistent high inflation in the US. These factors have significantly diminished the likelihood of any near-term Federal Reserve rate cuts, casting a shadow over asset valuations. Bitcoin and Ether posted risk-adjusted returns that underperformed traditional assets such as gold and oil, which gained during this period due to geopolitical tensions in the Middle East. We see a stark shift in market expectations regarding Federal Reserve policies. At the end of March, the markets had priced in as many as 3 25 basis point rate cuts by the end of the year. However, strong labor market reports and persistent inflation have led to a downward adjustment, with expectations now just over 1 25 basis point rate cut. Over the past month, higher real interest rates have likely supported the value of the dollar and weighed on the price of alternative money systems like Bitcoin. One of the highlights of this month was undoubtedly the Bitcoin halving event on April 20th. This key event reduced the network's rate of new issuance from about 900 coins per day to about 450 coins per day. After the halving, the network's inflation rate, or the annualized rate of new issuance relative to existing supply, fell from about 1.7% to about 0.8%. Bitcoin's inflation rate was comparable to gold's supply inflation prior to the halving, but now is meaningfully lower. On the day of the halving, we also saw a dramatic spike in transaction fees due to the launch of Runes, a new token standard on the Bitcoin network. Fees collected by miners jumped to around 1,200 Bitcoin, compared to the usual 70 Bitcoin, before stabilizing later in the month. This increase in fees, while beneficial for miner revenue and network security, raises questions about the scalability and practicality of Bitcoin for smaller transactions. Moving to the second largest crypto asset, Ether underperformed relative to Bitcoin this month, possibly due to pessimism in regards to a potential spot ETF approval in May. At the same time, on-chain activity within the Ethereum ecosystem continued to rise, led by growth in daily active users from Base and Arbitrum. Despite recent underperformance in Ether token returns, we continue to have a positive outlook for Ethereum and think it will benefit from the tokenization trend in particular. April also brought several elements of encouraging news in regards to stablecoins. First, Senators Loomis and Gillibrand proposed a bipartisan bill outlining a framework for stablecoin legislation. Second, payments processing firm Stripe announced that it would allow its customers to send USDC stablecoin payments on Ethereum, Solana, and Polygon. The total market cap of stablecoins has grown by 23% since the beginning of the year, with Tether, or USDT, growing its dominance to 69% of total stablecoin market cap. Both Bitcoin and Ethereum outperformed each of the FTSE Grayscale crypto sector indices this month. The best performing market segment during April was the currencies crypto sector, largely due to Bitcoin's comparatively steady price. The worst performing sector was the consumer and culture crypto sector. Weakness in this category reflected a retreat in meme coins, following strong gains for that subsector in March. In light of the shift in the outlook for Fed monetary policy, a pause in the rally seems appropriate. Higher real interest rates are a fundamental negative for Bitcoin. Yet, broadly speaking, the macro outlook still seems supportive. The US economy is on track for a soft landing. Fed officials are still signaling that rate cuts will eventually be appropriate. And the November elections seem unlikely to result in more fiscal discipline. Moreover, measures of Bitcoin's valuation, like the MV/RV ratio, are well below the extremes that marked prior cyclical tops. As long as the macro outlook remains broadly unchanged from here, Grayscale Research believes that Bitcoin's price and total crypto market cap can move higher again through the balance of the year. Thanks for listening, and we'll see you again next month.